predicting its resistance at higher levels and slips below 25,900 with broader markets underperforming. It's a sea of red across sectors led by a sharp sell-off in IT, while reality, pharma and PSU Bank add to the drag. FMCG offers only marginal support amid the widespread weakness.
The tech pack is leading the drag on the street with heavyweights like TCS and Wipro hovering near 5-month lows. Infosys and Tech Mahindra have tumbled over 4% each, adding to the pressure. The weakness comes amid fresh concerns that nimble AI startups could disrupt established tech players and reshape the competitive landscape.
FMCG major HUL has come out with its Q3 earnings, where the net profit has dipped 30% on a year-on-year basis, dragging investor sentiment down. But the management is expecting FY27 to be better than FY26. The stock has slipped in a trade post-earnings announcement.
In LG Electronics, thanks after weak Q3 with profit plunging over 60% on a year-on-year basis, hit by elevated operating expenses. Despite the sharpness, brokers stay bullish, betting on its premiumization strategy and pricing actions to drive a recovery. Management too remains optimistic, banking on the seasonal demand to lift performance ahead.
Meanwhile, Lenskart surged to a record high after delivering stellar Q3 earnings, with profit jumping 70% on strong international traction and robust volume growth. Morgan Stanley upgrades to overweight and raises its target, saying a valuation re-rating is justified on sustained growth, while also hiking its EPS estimates.
Hello and welcome. You tune in to Buy Now Sell Now. I'm Ankita Saxena, and this is the show where we get you all the action coming in from the markets. And as of now, if you see the market, as far as the frontline indices are concerned, we have a very lackluster day coming in. We are down 0.3%. 25,850 is the level that we're holding on to. In fact, we are below the previous session's trading closing day, and even on Nifty Bank right now, we have managed to recover though from the day's lows, 100-odd points of recovery that we're seeing on Nifty Bank. But that's we are up just 0.1%. 60,830 is where Nifty Bank is at. But let's take a look at the broader market then. Mid cap is trading down 0.6%, and small caps also trading down 0.5%. So it's the broader end of the market that is underperforming. There's still a weakness in the broader end of the market. But as far as advanced decline ratio is concerned, even that is tilted in the favor of declines, and a couple of movers that are in focus today are, such as we have ICICI Bank that is in focus. In fact, ICICI Bank is one of the gainers in the trading session on the back of that they have received approvals from RBI to acquire stakes in 8 different banks. So that counter is in focus, and a couple of other names on the back of earnings. And one of the names that is in focus on the back of earnings is LG Electronics. And Shrishti is here to take you through all the details and the lowdown for the earnings of LG Electronics that is trading down right now.
Well, absolutely. LG Electronics, when it comes to the Q3 performance, that is not impressive. But what is impressive actually the commentary, because the company is definitely not just hopeful of a good demand momentum in the domestic market, but internationally as well. With respect to the kind of deals that India has signed recently, LG Electronics wants to win the markets. But what are their big plans going ahead? Let's try to decode all of that. And we are being joined by the management of LG Electronics onto the show. Let me welcome Mr. Sanjay Chitkara, who is the Director and Co-Chief Sales and Marketing Officer of LG Electronics, as well as Atul Khanna, who is the Chief Accounting Officer, is also joining us. A very good morning, gentlemen, and thank you so much for your time. And firstly, let me come to you, Sanjay, and have a word with respect to the number performance, because it's the second consecutive quarter where we have seen some bit of a pressure in terms of the earnings. But the company has also given a very strong guidance in the times ahead. Help us understand what is giving you the confidence at this point in time. Are we already seeing some green shoots in the month of January and February?
See, the current result is not a reflection of LG business weakness. It was more of a broader industry issues, as our industry was already facing a cool summer impact where partners' inventories were higher, And Q3 is a very small quarter for us, 16 to 17%. So we decided to help our partners to correct their inventories. In this context, we avoided overbilling to them and focused on inventory correction. So it was a deliberate short-term adjustment for Q3, which will help us to strengthen our fundamentals for quarter four. Now, talking about Q4, so we are getting a very good demand signals, and Q4 is a big quarter for us that contribute roughly 28%. And structurally, it's a support by seasonality factor, and we will have a better operating leverage. As mentioned, the demand visibility is better, and affordability of our products has improved with the GST cut. And we have also given many new segments where we were not operating earlier, like French door or bottom freezer. Fixed speed ACs were not there, that we have supplied. Less than 1 ton capacity ACs we have introduced, which where we were not present. And apart from this, we are entering to a new business of chest freezer also, which was not there earlier with LG Electronics. So our essential series is also we are getting a good traction for that. So the early indications are that in January we performed much better than last year. So this, we believe this growth momentum will continue, and we believe that we are likely to have a better results in quarter four. Apart from this, there is some announcement about the tariff things, and the many new opportunities are evolving with EU FTA deal also. And LG is a global brand with a global demand, and the company like LG Electronics, who has Make in India capabilities, will be highly beneficiary for this. Our um, third plant is already on the way, and it will be operational sometime in next year, October. And from there, we will further expand our export. Currently, it is roughly 7% of our overall revenue, and in time to come, we will further expand it.
Just to correct here, this year, October, our third plant will start with
Yeah,
the
sorry.
first line of operations.
Yes, sorry.
All right, gentlemen, thank you so much for the detailed answer. But Atul, now let me have a word with respect to the margins. The commentary remains positive, but in quarter three, your margins have compressed sharply. We did read the press release. We are aware about the things that you have highlighted, what really made these margins compress at this point in time. But what's the visibility that you will bounce back to those levels of 6 to 7% maybe? And what, as per you, will be the normalized margin band range?
So, just to highlight, you rightly mentioned that our margins have come down, and we have never seen in the past also. This was one of the quarter where we have this impact has given a pressure on our margins, and that too with the softness of revenue, which impacted operating leverage, number one. Number two is that there is a one-time impact also due to the new wage code, which was being implemented from this quarter only, where the past service cost expense we have accounted for in the form of employee cost. And there is another impact of advance pricing agreement, which we have signed with the CBDT, Government of India, where we have our contingent liability towards transfer pricing litigations and royalty payments to our parent company. We made it zero after signing that advance pricing agreement for 9 years, 2014 to 2023. And this is one of which has impacted on our PAT also. Apart from that, yes, there is an impact of RMC mix impact as well as the FX burden, which particularly we tried to recover that, but it was not, due to this summer season, due to the season of quarter three, which was got slow during this after Diwali. We have continued with some investments in the market to keep our partners' momentum high, confidence high. And going forward, if we talk about FY 26 as well as the quarter four, we are very much confident that with the sellout trend increasing, we have seen January results, though we cannot call it as a number, but we have seen a very positive trend. So with that, we would be remain consistent in our margins in the early double digit EBITDA margin, we can say, for the quarter 4 as well as the full year FY26. And FY27, as Sanjay ji explained on the new product launches we have brought in, where the categories where we were not present, that will add on to our top line, as well as it will give an operating leverage benefit also along with the exports.
All right, that's good to know. But Atul, just a bit more follow-up there with respect to the margin outlook. That is really good. But this time around, though your margins were compressed, on the flip side, you have actually gained market share across your key categories. What's the current strategy? Are these market share gains on the back of some sort of a compromise with respect to margins? Is that the current strategy? And going ahead, what will be the priority? Will that be market share? Will that be improving the margin profile of the company?
So, just to highlight here that we normally do not compromise on market share. Our strong fundamentals remain the same, and we will try to capture the market share going forward again, as we have done in year 2025. So this will continue, and our focus always remains on the fundamentals to be a sustainable top line growth with a more sustainable margins in the double digit EBITDA margin.
Digit EBITDA margin, but very quickly, if I can have a word from you, Sanjay, on the recent FTAs that have been signed. You have come out with a very positive commentary, but these will take time. Maybe in the next couple of years, everything will be finalized. But how much of an incremental volume do you believe these FTAs can help for LG Electronics?
So, firstly, before going to FTA, you see, we are a 28 years old company, and in past also we have seen some short-term challenges. But over the period, we have fostered a culture of long-term thinking. We strengthen our fundamental in this quarter and improved our market share. In across all categories, this year we improved our market share. Talking about FTA, so recently these opportunities have arisen, and as I mentioned, we have a global presence and global demand, and which will strongly drive our export. Currently, our export is 7% of our revenue, and amount wise, it is 160 to 170 million US dollar. But our third plant will be operational this year in October. From there, we will further expand. You see, our current Pune plant is covering the western coast, and this plant is situated as eastern coast, so we'll cover both the coast of the country, and that will open many new doors of export. Currently, our export is mainly the volume and mid-zone products, but we will plan and we are working to cater to the other developed economies like EU and USA. The reason is we have started producing premium products in our factory, Pune factory, like side-by-side refrigerator, large size refrigerator, which is the mainly demand for these countries. So we are fully capable with the quality test and price competitiveness, and we will bring a new momentum in our growth trajectory with the help of our export business. So currently, it will be too early to comment on the numbers.
All right, but we wish you all the best for that. Thank you so much, Sanjay, as well as Atul, for taking the time out and speaking with us this morning.
Thank you very much.
All right, so that was the management of LG Electronics, confident of getting back and bouncing to the double-digit EBITDA margins and a very strong commentary for Q4. But with this, viewers, time now to slip into a very short break. Don't go anywhere. We'll be right back.
has gone up thanks to the gold prices. But then let's dive in more and let's understand how are the next quarter shaping up, and especially looking at the gold prices, what's the demand looking like? Mr. Viraj Thadeshwar, CEO, Shringar House of Mangalsutra, has joined us live. Hi, good morning and welcome to the show. Congratulations on a fantastic set of numbers. Revenue growth has been really strong. Just wanted to understand how much was driven by gold prices, inflation versus real volume growth, and have the prices affected your sourcing strategy as well?
Good morning, and thank you for inviting. Gold prices, as we all know, that has been it's been very volatile, and there've been ups and downs. But the best part about gold is that it holds a lot of trust in the economy and in the country. But once the fluctuation and the volatility is lowered down and it stables at a point, we see a very good and a steep growth in sales. When you know the rates have been growing since the last decade gradually and sometimes at a very fast pace, we have observed that the sales have never gone down. Instead, they have increased. I believe that's the trust the audience and the customer has in gold. So I currently feel that right now there may be a lot of volatility, and people are in double minds what to do, when to get in and when to buy. But right now I see some stability coming in gold, and that's the reason I feel the upcoming season is going to be a super hit season.
Right, but Viraj, hi, this is Ankita also joining in. Has the higher gold prices really led to a shift to a lighter weight product, or what have been the ticket sizes? What did they look like in Q3?
No, definitely not only now. I feel since last few years, there has been a very good demand in lightweight, because not only because of the prices, but also because the design portion. Now the new generation has come in. The new generation that is getting married. So the design concept that people are more preferring on the lighter weight, and in lighter weight modern designs, something which is a beat with the international trend. And in fact, earlier we have used to focus more on 22 carat, but now we have seen a very fast and a steep rise in 18 carat as well. Indian market is definitely growing in terms of lightweight jewelry, because the new generation have more trust in the commodity, and they can use it as a fashion as well. It's a win-win situation for the customers and the buyers.
Absolutely. But then, what is your hedging strategy now against gold prices fluctuations? Let's just also talk about that.
No, definitely. It's a very important strategy, because we don't know where it's going to head and when. So currently, Shringar has is been following a hedging policy, and we will continue doing that, because in this volatility, it's necessary to keep a safer bet rather than going and getting involved in something that is not necessary. So hedging is a must, and we do follow a policy in hedging.
Viraj, on that note, thank you so much for joining us on ET Now. It was a pleasure to have you on the show. But we'll move on to the next story. Defence Acquisition Council that is set to consider a major proposal to purchase 114 Rafale fighter jets from France ahead of the Macron's visit. My colleague Shinjo is now joining us with the exclusive details of this visit.
Important Defence Acquisition Council meeting coming up in a couple of hours. It starts at 12. It's headed by Rajnath Singh, the Defence Minister. The primary issues on the agenda are as follows. The AON for 114 Rafale fighters for the Indian Air Force. These are French-made, and the decision is being taken before the visit by President Macron of France in a couple of days. Secondly, is the Scalp air-to-air missiles that the Rafale fighters will be armed with. The Rafale deal is, of course, the biggest deal ever for such fighters. This is a 30 billion euro deal, the biggest deal ever by the Indian Armed Forces. Apart from that, India already has the P-8I maritime reconnaissance aircraft. Now, these were stuck because of problems with the United States. But now that the trade deal is done, 6 of them will also be on the agenda. So 3 major issues coming up for the DSE in a couple of hours. The DSE, of course, includes, apart from the defense minister, the minister of state, and also the chief of defense staff, the 3 armed forces chiefs, the defense secretary, and the DRDO chief. So it's a huge effort coming up at the DSE. The 114 Rafale fighters, along with it, the Scalp air-to-air missiles, and also the PA ties.
All right, thank you so much. And that's the update on the DAC meeting today. But then on that note, it's time for a short break, and post that, more management coming up to talk on their Q3 results.
This is worth sharing.
Eicher Motors, and on the back of that, Eicher Motor is doing well with gains of 1.6%. That's the only auto name that is doing decently well. Besides that, we have BEL that is also in focus. Now remember, BEL is in focus on the back of news flow. They have also, they have the government will be selling stake of around 3% representing 10 crore shares in Bharat Electronics, and on the back of that, that is in focus. That's trading up 1%. Besides that, we have M&M that is also in focus on the back of its results. We did see revenue, EBITDA and PAT that were in line, but margins that were really below what we were expecting. But what else are you spotting in the market, Kavita?
I just want to put the focus on the IT pack. The index is definitely down more than 4%, and one really has to understand that, till now, we've seen almost around 1.3 lakh crore combined market cap, that has been wiped out, that's gone out of the way. TCS, Infosys, Wipro, we've seen all these counters. Look at the fall that they are witnessing right now. Definitely the fears, which are ongoing of AI-driven disruption and stronger than expected US jobs data has also dampened expectations of near-term rate cuts, and we can see Nifty IT totally taking the hit. All the counters are down almost 4.5 to 5.5%. So that's really a major loser and also driving the markets down. But apart from that, let's talk about Hindalco. The stock is in focus. It was also trading low. I mean, it's close to 1% due to Novelis Oswego Fire's delay restart. It's almost a dent of 14,000 crore cash flows that we are talking about. So, Ankita, that is what is in focus. Very stock-specific market today, but definitely IT pack, it's taking the hit.
Absolutely, Kavita. IT is really taking it in the chin. And besides that, we also have individual stock movers that are, trading and buzzing on the back of their earnings. So let's get an earnings candidate on board from Orkla India. Sanjay Sharma, who's the MD and CEO, is now joining us. Thank you so much for joining us. Now you can see the stock is down almost 3% on the back of its Q3 results, but steady set coming in for quarter 3. But let's get the management. Mr. Sharma, hi, thank you so much for joining us. Mr. Sharma, growth has come in at 3% on a year-on-year basis. How do you read the growth trajectory for the business, as the growth seems to be rather tapered?
I think you've asked the very right question for us, because our numbers are a little numbers that need to be actually interpreted in the right person. What you see as a 3% growth obviously has certain other incomes also included in our portfolio. This year, we paid out a dividend of about 600 crores. So for the cash surplus which was sitting in our books has gone down, and therefore the income from this cash has also gone down. If you have been following the narrative that we have been talking about at Orkla, our business really consists of two key
categories, spices and masalas, and obviously the convenience food. And on spices and masalas, we've been having a very, very sharp deflation in the category over the last 2 years. In fact, when you look at deflation over the last 2 years, in spices, it's been to the tune of 30%, with chili as a commodity where the deflation has been to the extent of 50%. So if you were to take the value equation out and just look at the volume equation, I think we are reflecting a very, very strong and healthy picture. And then when you come to the bottom line of the business, EBITDA margins for the business has grown this quarter at about 17.7%. We are reported an EBITDA of 16.1% to sales. And on a YTD basis, when you look at it, our EBITDA growth is at 7%, but our EBITDA percentage stands at about 17.2. So when you overall look at the results, I feel that the business is developing in the right direction. We've got a strong volume traction, and the EBITDA margins is very, very healthy as well.
All right, point taken, Mr. Sharma. But, we just have a small interjection as the HUL press conference is on after the Q3 results. Directly, let's just go across that.
To be better than FY26. And if I divide this, I would say we should think of two reasons for this. First is the macro factors, which are extremely conducive at this moment. We are seeing a gradual improvement in the macro factors, whether it is an account of low food inflation, the overall measures that the government has taken, or indeed our own portfolio transformation. The portfolio transformation coupled with the double down that we are doing to segment the channels of the future, existing channels, and strengthen our marketing. All of these, we believe, is starting to pay dividend, and therefore we expect 27 to be better than 26.
Okay, just to follow up on that, hi, first of all, morning, Niranjan as well as Priya. Good to be speaking with you. Just want to understand this 4% volume growth number. It is much better than what the street was estimating, between 2 and 3%. Given that we've seen a decline in the revenue, revenue is in line, pardon me, but a decline in the PAT that's coming, if you don't account for this ice cream business demerger gain that we've seen. Margins have also slipped on a year-on-year basis, although they continue to be on the upper end of your guided range. Could you help us understand what has led to this volume growth of 4%, and does it actually account for the kind of underlying business that we've seen?
Let me pick that up to start with. First of all, our 4% volume growth is probably the highest in the last 10 to 12 quarters. It's been a very broad-based growth across categories, as you saw, with our USGs in 3 of the categories at 6%, and in home care we had a mid-single-digit UVG, and there was a price which was taken earlier as a correction, which led to the USG of 3%. So it's a broad-based growth. It's not a growth which is coming from just one category. Coming to, again, your question around the profits, yeah? So again, let me reiterate, because you said revenue decline. Revenue is actually grown by 6%, yeah? On the profit part of it, I think you should look at 3 levels of that, yeah, from the discontinued operations. Number 1 is your EBITDA growth. Our EBITDA growth is 3%. Our margin is 23.3%. The EBITDA margins include a one-time charge which we have taken on account of the gratuity impact of the labor code, and that is around 110 crores. So obviously adjusted for that, if you look at it, then EBITDA margin would have been also close to around 5% growth, yeah, at around 24%. Of course, in the quarter, the A&P has been a little lower in terms of percentage to the revenue, which will get stepped up moving forward. So the quality of the growth has been very good in terms of our EBITDA growth, absolute, that you talk about. The third element coming to the PAT. Again, the PAT has not declined. You have to look at PAT before exceptional item. The PAT before exceptional item actually grew by 1%. So against an EBITDA growth of 3%, a PAT growth of 1% happened because of the lower financial income, which was driven by our capital allocation, which we did, which is spending on acquisitions, which then resulted in the lower investable surplus. So underlying, if you look at it, capital allocation has been towards paying out to shareholders and acquiring brands which are in the category that are growing. And if you look at underlying EBITDA, that has grown by 3%, but that had a one-time charge. So that's the right way to look at the results of the discontinued operations.
Okay. Hi, Shilpa Ranipeta here from CNBC.
Right, so that's the management to 80 now on HUL results, and the stock is currently down more than 3%. But then, Mr. Sharma, thank you so much for waiting by, and let's just go back to the numbers, and wanted to understand what levers are available for stronger growth as per your understanding, and what kind of margins can one expect?
The way we look at building business as far as spicy and masala is concerned is largely about focusing the business on a local basis. So we are looking at growth in our core states. Eastern as a brand focuses on Kerala. Karnataka as a brand focuses on MTR as a brand focuses on Karnataka and Andhra Pradesh. So here it is all about driving depth of consumption, driving penetration as far as the business is concerned. And in this quarter, and when you look at our business, spices have actually grown at 10.1% in terms of volume. We have supported this by a lot of advertising that we have done in the regional markets, a lot of advertising that resonates very strongly with the culture. But at the same time, we have done a lot of good initiatives in terms of driving distribution of the business is concerned. In fact, in quarter 3 itself, our distribution has grown by almost 24,000 outlets as far as Karnataka and Andhra Pradesh is concerned. Pure spices, which is another very important lever for our business, for MTR, has almost, since 2022, more than doubled in terms of volumes. Our penetration in both Karnataka and in Andhra Pradesh is growing very, very fast. In fact, in Andhra Pradesh, our penetration has gone up from 4.3% to 13.3% between 22 and 25. And similarly, in Karnataka, it's gone up from about 22% to almost 30% between 22 and 25. So the kind of work and the kind of initiatives that we are doing is actually driving a lot of good penetration.
Right. So finally, in terms of the current product mix, what gives you the best margins?
So I think our portfolio basically, as I said, consists of three key components, which is spices. You can break spices down into pure spices and blended spices, and then we have convenience food as a big portfolio. When you look at margin comparisons around that, I will not be able to share detailed numbers with you, but if you take pure spices at X, blended spices delivers roughly 2x margins, and convenience food delivers roughly 1.8x the margin levels that we get.
All right, Mr. Sharma, thank you so much for connecting with us and speaking on the results today. Thank you so much. And with that, it's time for a short break, but then post that, more management commentary coming up. Stay tuned.
Fly Emirates, fly better.
माही भाई कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian. Truly.
Presented by Canara Bank. Together we can.
अरे टेंशन किस बात की? सेंचुरी प्रोवुड का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
प्रीमियम प्लस by Century ProWood. LIC brings its Navjeevan Shri for young professionals. Pay regular premiums, enjoy life insurance, earn guaranteed additions as a percentage of premium. Create a guaranteed corpus at maturity for your dream goals. Attractive incentives to existing policyholders. Buy today.
In
इम्तियाज जी के फादर को बीमारी के कारण अचानक हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
I am transferring money to the broker for the margin. He shared a UPI ID with me.
The ID has BRK after the name, then it means it is a broker. And if it has MF, then it means it is a mutual fund. After the @ sign, the word valid should appear, followed by the bank's name. And on the app's confirmation screen, there should definitely be a white thumbs up inside a green triangle.
An investor awareness initiative by SEBI.
यारा ओ यारा शुक्राना तुम्हारा, सपने हो पूरे हमें ये यकीन है, हम आपके वास्ते हर कहीं है।
यानी ये है जगह नो टेंशन वहाँ।
Premium Plus by Century ProWood.
Come.
रिया
My daughter Ria is gonna be a pilot, right?
My little girl will be a fashion designer for sure.
Oh.
Whatever Ria becomes, LIC's Amrit Bal Children Policy will always be there for her. बड़े सपनों का रखे ख्याल।
Whenever I ate ice cream, I felt a sharp sensation in my teeth. Then the dentist told me that the upper layer of my teeth had worn off and nerve endings are getting triggered by eating this cold ice cream. My dentist recommended using Sensodyne daily.
Sensodyne goes into the teeth and calms the nerves.
Sensodyne works.
Anytime is a good time for multi-asset allocation funds. Invest in equity, fixed income, gold, silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
कभी पानी जैसा खिलखिलाए, कभी चुपचाप जमीन बन जाए, कभी रोमांस के स्पार्क्स जलाए, तो कभी पेड़ों सा एवरग्रीन बन जाए। सेंको एलिमेंट्स ऑफ लव।
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
पापा, इसमें क्या है?
इसमें देश है बेटा।
कितना बड़ा अपना देश अपनी गोद में लेके जा रही है ये जो अपनी गाड़ी है, इस पे भारत आगे बढ़ता है। हम आगे बढ़ेंगे, देश आगे बढ़ेगा। टाटा मोटर्स, कमर्शियल व्हीकल्स, बेटर ऑलवेज।
Services power your daily life. From instant deliveries to seamless payments, they are now the backbone of India's economy. Services contributed nearly 55% to India's GVA, employs around 31.5% of the workforce,